So PEPCO grabbed the headlines, Bart and I are stating very clearly that the economic environment in the country was no longer possible for it to continue operating. We have also seen the pain coming through the accounts of companies such as Nampak, as well as the others that I read out before. Are you suggesting, or is the economy in Zimbabwe in such a difficult space that it's a matter of time before everybody who is from outside that country heads for the doors?
Yeah, I think it's a bit interesting, given that, of course, we've got a lot of these international companies that invest in some of the blue chips that are even some of the listed companies. So really, given the macroeconomic environment, we also expect similar developments to also happen in certain sectors. But just looking at the PEPCO case, I think they've highlighted the three major causes to say that there's been a lot of inflation, and then issues around fuel shortages, and also the low disposable incomes. Because by the end of the day, as a business, what you want is demand. And if disposable incomes are quite low, then in terms of your returns, they are quite low. And also considering that there's an opportunity cost really of investing in Zimbabwe right now, given that there are other options elsewhere to put your money.
Yeah, this is a difficult story for me because, I mean, it's clear what's going on in that country. The economic chaos, obviously, it is not conducive for any company to be operating in. But when you look at some of the reasons, I mean, yes, inflation is accelerating, but we know this is an economy that sustained inflation of 5,000 billion%. I don't know how you even count that number. Don't you think people should perhaps look a little ahead and see something ahead on the horizon, and that eventually the government is going to be able to get things sorted out?
Yeah, some of these companies, Godfrey, have been around for quite some time, and they've been hanging in there for a number of years. For example, if you then look at Power Cells, I think they started with around 200 stores, and then they've been cutting back, and now they are at 20 stores. So it really shows you that they were in there for the long game. But I mean, there are other options, and you have to preserve shareholder value. But I think you actually indicated a very good point to say that given the recession, there are opportunities really to take a long-term view and probably to buy into certain distressed assets that could be quite cheap and have a long-term view. I'll give you an example of the Miko's iconic hotel. Right now, it's up for sale. It's being sold at just 20 million USD, United States dollars. In terms of our estimates, we think that it could be valued somewhere around 50 to 7% in terms of cost replacement cost. So it really shows you that there are depressed assets, quite distressed, and there could be opportunities really to buy in at a very low level.
Would you go so far as to say that's across the board?
Yeah, so I want to say across the board because I mean there are certain sectors that I think are quite undervalued, and also just looking at areas around manufacturing and also properties as well. I think those are the sort of areas that probably investors would look into and pick up some distressed assets.
Yeah, but when you look at the Zimbabwe economic situation and the government attempts to try to stabilize the situation here, I mean, if you're going to take a call and say, I'm staying in here, you'd have had to say, have some kind of time horizon within which you expect things to turn around. I'm going to challenge you to give me one.
So I'd say 5 year, basically 5 years, going to 10 years, because really it's a long-term game. And also some of the problems that we continue to see also linked on the political side of things, issues around sanctions and also relationships with international financiers as well. So really you have to take a very long-term view to say that, probably after 5 years, things would start normalizing.
What happened to the discussion around Zimbabwe adopting the South African rand?
I think it was quite logical for monetary authorities to really talk around those areas. But what we've seen is that, the RBZ continues to have a solid grip, especially around the monetary policy, and they're not really willing to back off. And we've seen, of course, them introducing a new currency, and now the money printing machines are on again. So really it shows you that, they are not willing to let go in terms of controlling monetary But it makes sense, definitely.
But at the same time, we did see them, I think, was that a directive to banks to cut interest rates, or was that a reduction of its own policy rate? I can't recall now.
Okay, so they increased the rate to around 70%. And then when there were announcements around the budget, I think the thrust was to boost productivity. And they felt that they were starving off companies in terms of more capital, so they had to cut it from 70% to 35%. So that's the rate, that banks can actually have access from the RBs. So really, they're now trying to push productivity and boost capacity.
Absolutely. You're normally very chirpy, but I can see the mood is also getting you down. Thanks very much. All the best. Batanai Matsika, Head of Research at Morgan & Co. in Harare, Zimbabwe.